Hey, this is Matt from InvestiQuant. Today is Monday, January 25th, 2021. And today's been a pretty wild day in the market. We had a quiet open that started to work its way higher, and then we got a massive drop in the markets, which was great for auto trading. We had several strategies on in the auto trading portfolio that was able to take advantage of that shorts sell-off there and hit their targets, and we have since started to recover. So we've got a lot of range that has happened so far today. We've tested below the prior session's low, and now we're trading up in the top portion of the range. So what we're going to do this afternoon is just take a look at that type of price action, see what it has led to as we approach the close of the session today. So let me hop into Discover. I'm going to add all four instruments. We're going to be looking at a time-based entry, and I think I'm going to do it a little bit different this time. I'm usually around 3 p.m. I'm going to go ahead and do 2:30 p.m. Eastern time for this one. So a little bit earlier because this pattern has formed already where we've got great range that has happened, and we've started to show some rejection down there at the lows as well. So this will give a little bit more time to play out. I've got it set up as a long, so this will be entering the market long at 2:30 p.m. Eastern time, and it'll exit at the close, which is 4:15 p.m. Eastern time. Now, the next thing I'm going to do is head into the post-open filters and describe this price action that we're seeing. And the first thing I want to say is that the daily range is large. We've already got 63 points of range in the S&P right now, and our current 5-day ATR is about 40 points of range. So we've got 150% plus range as a percentage of the 5-day ATR. So we're getting really strong range earlier on in the session. So I'm going to use that as a filter. I'm going to type in 150 here, and that means that the daily range as of 2:30 p.m. Eastern time is at least 150% of the 5-day ATR. So that shows lots of range taking place in the session. Next, I'm going to say that we have a lower daily low. So we tested below yesterday's low, and if I come into this intraday low versus daily levels, I can hit equals next to less than prior day low, and that means that the low of the session is below yesterday's low. And then I'm going to say that the intraday close, which is the price that we're at as of 2:30 p.m. Eastern time, is in the top half of the range. So if you got really wide range and you're trading in the top half of the range with a lower low as well, that's showing some price action that is rejecting the bottom portion of the range, the lows that we've tested. So this shows a bounce that is forming. So I've got that all added here. Next, I'm going to add a similar market environment where we are above a 10 and 200-day simple moving average, then click View Results. And here we go. These are the results of going long at 2:30 p.m. Eastern time, exiting at the close, 4:15 p.m. Eastern time. When you're in a bullish market environment and you get a really large range taking place by 2:30 p.m. Eastern time, where you've got a lower daily low, and at 2:30, you are trading in the top half of the range. So lots of range. You've got some rejection down at the lows, trading up at least in the top half of the intraday range. And historically, this pattern has taken place 26 times in the S&P, 25 in the NASDAQ, 25 in the Dow, and 19 in the Russell. If we take a look at the win rates on those, you'll see the S&P coming in at 69%, so pretty strong. It's not a huge sample size, but the ones that are there have been favored. The NASDAQ's pretty neutral at 48%. The Dow coming in at 60%, and the Russell at 63%. So if we looked at them as a group, they would be leaning to the long side. If you were just kind of add all four of those instruments together and average them out, they would be a bit favored here in this scenario. If we take a look at the average win to average loss here for the S&P, you can see the average win a little bit bigger than the average loss. That's not the case in the NASDAQ. The NASDAQ has the neutral win rate, and it looks like the average loss is just a touch bigger there. We're pretty similar in size for average win and average loss for the Dow, and then the Russell, the average win has been a little bit larger than the average loss. So as a group, again, not a huge sample size on any of these, but they have leaned a little bit more towards the long side, with just the NASDAQ being neutral. So hopefully you found that helpful. Good luck the rest of the day, and we will see you next time.